So we were dealing with this profit and loss problem on Lena Bank Limited, and we have looked at a few different adjustments in this problem. We have calculated something called rebate on bills discounted, and we have seen how to adjust that. We've also seen interest on advances that were NPAs, interest which has not been received, how to deal with that. And of course, we have also looked at another working note on the different types of advances, right? So we've seen how many different types of loans or loan categories exist in case of banks, how they classify this loan depending upon how long that loan has not been serviced or not been paid, and the way provisions are calculated for those loan amounts, right? So certain reserves are made, certain provisions are made in order to take care of any losses which the bank may suffer if those loan or if that loan money does not come back into the business. All right. So accordingly, based on the rates of provisions given to us, we calculated the total provision on advances of it, a combined figure of all the provisions of the bank. We got 185 as the total amount. So what needs to be done next is, our profit and loss account is ready up to this point. Only figures we require is provisions and contingencies. And we know that by now, provisions and contingencies includes things like provisions made on doubtful debts, provisions for income tax, and also the provisions that are made for such advances, the one that we have just calculated. Okay, so that provision will also form part of your provisions and contingencies. So let us accordingly calculate those provisions, calculate our profits, so that we come or arrive at the figure of profit for the current year. Okay. So in our working note, what we will do is first calculate what is the profit that we have as of now. Alright, and accordingly we will get the figures for the provisions, as well as we will try to get what is the provision for taxation. Okay, so let's see. Now in this problem, the total income that we have is 99,627. Income category is complete, so bring the total income over here, 99,627. Okay, to that, from that we have to minus the total expenditure, but only the two figures that we already have, that is 70126 plus 21316. All right, so let's see what is the total that we get out of these two. We have 70,126 plus 21,316. Okay, so 91,442 is the total expenditure only up to interest and operating expenses. Provisions we are yet to calculate, provisions we are yet to add in our calculations. Then from this total expenditure, if there are any other provisions, we also have to minus those. Provisions for doubtful debts, advances, anything that we have. And in this problem, we have calculated provisions on advances. Total is 185. So let's see, 185. So if you minus all this from 99,627 minus 91,442 minus 185, the profit before tax you get is 8,000. Okay, so before any tax is calculated, by taking account all these expenses, we get profit before tax 8,000. Let's see what the problem says about the income tax provision, how much tax we are supposed to pay during the year. Make a provision for income tax including the surcharge at 35%. So income tax provision at 35%, and that gives us 35% of 8,000 gives us 2,800. Alright. So after deducting the amount, the profit after tax or the profit for the current year that we get is 5,200. Okay. So this is how we arrive at the current year's profit calculation. Now what we need to do next is see if there are any reserves. See if any amount out of current year's profit needs to be transferred to any particular reserve. Alright. Now we have been given in the problem two types of reserve. One is statutory, which we have to include even if not given, and one is the revenue reserve of 10%. Okay. So let's calculate 20% of 5,200, only the current year's profit. Okay. So this 20% is 1040. Similarly, we have a transfer to the revenue reserve, right? So revenue reserve of 10% in this case, and 10% of 5,200 will come to 520. You don't need to add these up because separately both these transfers are later going to our appropriations. Alright. So appropriations in the P&L account. Let's just finish all our calculations in the working note first, and then accordingly we will transfer them one by one. So now what is the total provisions and contingencies? We have two different figures that will come here. One is provision for advances, 185 of course, and one is provisions for income tax, which is 2,800. Okay, 2,800. Or we could just put this in the inner column, make calculations better, 2,800, and the total of these in the outside column 2,985. Total provisions and contingencies figure is 2,985. Okay, we'll keep our problem here so that we can see clearly. Now let's move all these items or post them back to the profit and loss account. So provisions and contingencies, remember, is this amount 2,985. Come back to your profit and loss account, and under provisions and contingencies we write 2,985. Done. Next, what we need to do is total up our expenditure side. So total of all these three gives us 9,427. That's the total expenditure. Based on that, let's calculate profit or loss for the current year. Okay, so if you either one alternative is looking into the working note, where we have already calculated, but to cross check if that is correct, just minus the expenditure from whatever incomes that you have, and you will again get the same figure, and you can cross check if that is correct, right? So 5,200 is what we got in our working note as well, which means it is right, 5,200, and the previous year's balance should be given somewhere in the problem. Let's see here, balance of profit and loss account brought forward, that means from the previous year, 1,835. So 1,835. Total of these two, 7,035. Right. So total profits including previous years, current years is 7,035. Our appropriations will tell us how to utilize that profit. In our appropriations, we have to show what we do with all those profits. Okay. Now one thing, the first thing we know is your transfer to statutory reserve is definitely there, and there is also transfer to revenue reserve given in the problem, which we have calculated. So statutory reserve revenue, how much did we calculate? Amount was 1040, revenue reserve was 520. Post that in your P&L account. 1040 and 520, right? So those transfers have been brought forward over here. Then there is, let's check if there is dividend given in the problem. Board of Directors have proposed a dividend of 10% of the paid up share capital. Now this time direct amount of dividend is not given to you. You are asked to make the calculation. Okay. So somewhere the share capital amount is given in the problem. Let's see here. Lena Bank Limited has a paid up share capital of rupees 1 crore. Okay. Now this 1 crore, since all of these amounts are written in 1000, we also need to reduce that 1 crore to in the form of thousands. So normally if we write 1 crore, it would be like this: crore, lakhs, thousands, right? These many digits. But if you try to write it in the form of 1000, that is, you eliminate these 3 zeros, how much will it be? 1, 2, 3, it will be 10,000. So technically 1 crore is 10,000 thousands. Fine. Since we are writing all of these amount in 1000, we are reducing it to 1000. So the proposed dividend is 10,000 multiplied by 10%, right? We have been told it is 10% of the paid up share capital. Okay, so it is 10% of this 10,000, which gives us dividend of 1,000. Done. Now what happens to the balance? Our total profits are 7035. From this 7035, we have transferred to statutory reserve this much, revenue reserve this much, paid dividend of 1,000. Whatever balance remains, which is 4475, that goes to your appropriation. That is, it goes to the next year's balance sheet, right? So it gets carried forward to the next year. So that is our problem here with all the working notes complete, and different working notes on provisions for advances and everything, and your profit and loss account should look something like this. Okay, so all the schedules and all the working notes included. All right.